Welcome to the Building Web3 Podcast. I have my good friend Diego. He's the Chief Strategy Officer and co-founder of BitFlow. Before we get too deep into BitFlow, tell us a little bit about your come to Web3 moment and what got you into crypto.
Yeah, sure. So I come from a marketing and tech background. I started my career in advertising and founded a marketing agency, which I ran for about 12 years. And during that time, we went through the digital revolution where all of these brands were trying to, stay relevant and also adopt marketing technology, which is something that we kind of uh, pivoted to in order to support these brands across the globe. A lot of them were still very new to the e-commerce, payments, customer support, and everything that comes in with serving direct-to-consumer brands or direct-to-consumer products. And throughout that time, I was usually just kind of tiptoeing into crypto in general. I wasn't thinking about Web3. I don't even think in 2014, 15 was actually a term. It was just crypto. And I thought I was too late for Bitcoin back then, which I wasn't. And I started slowly investing, buying some crypto, and then ICO phase came. Um, Jumped in some of those and just kind of left it there. And then around 2018 or 19, post ICO, we started seeing a lot of these uh, crypto startups fail or crash. Um, and I started questioning, is there something more to it? Why did this happen? And started really understanding and researching about decentralization and what are the risks, and understanding, that not every crypto is the same. Even though we do have some really good examples from back then, from Chainlink and others, I think are good startups. But then right about what was it, 19 or 20, NFT just kind of came into the scene, and I was working in still marketing back then, and we started getting these clients to do branding, to do website, and to help them on the digital ecosystem with their NFT projects. And I was like, oh, there's definitely something here, but why are people minting something that's saved on a centralized server that can totally disappear? Like, you're literally buying a JPEG that's on this server. Yes, you're getting a token on Ethereum, but there's got to be something more to it. And right about that time, I was in Miami, and I heard about Stacks, and I heard about Miami Coin, which was one of the first use cases for Stacks, the proof of stake. And I was like, oh, there's something here, like they're building on top of Bitcoin. That's interesting, because by that time I was like, there's got to be a way for us to replicate this, or maybe launch NFTs on Bitcoin. There's something there, right? And back then, Stacks NFT came into place, which is called Gamma today, and that caught my attention. And I said, oh, it'd be really awesome to launch a NFT collection on Bitcoin, right? Um, and back then, everything was very new. People were, making tons of money on Ethereum and flipping Bored Apes and World of Women and all of that. And I looked the other way, and I said, okay, there's got to be something else that we could do with NFTs in terms of utility, or at least there's got to be a bigger motive than just flipping money. I was in Miami at that time. It was, I think, the pandemic just hit, and schools were closed. And I said, there's got to be a way for us to, help these public school students, but also, as you know, during the pandemic, a lot of the other states closed, so Miami became like the go-to hub, right? And all of these crypto companies, A to Z, investors, VCs, protocols, founders, builders, they're all coming to Miami, and I wasn't seeing crypto or blockchain education being as relevant to the community as it was to the other outsiders coming in. I was like, it's not dripping down. Like, high schools are not teaching blockchain technology. Colleges are just starting to adopt this into the curriculum. Um, and this took me back to early 90s, 95, 96, when I was starting to build my first website. And I remember going to teachers and saying, hey, I want to, be a web designer, or I want to build websites. And they're like, nah, go to college first, type of thing. And even in high school, I graduated in 2004. And I remember telling one of my counselors that I wanted to do game design or advertising, go to Full Sail University. And it wasn't, it wasn't the best route. They still didn't get how big web could be. And I kind of had a deja vu moment. I was like, we're going through the same thing. You talk to these kids, they're holding on their phones, they're already trading NFTs, they're doing all this stuff, but then you go back into school, they're not teaching blockchain at all. So there's got to be something there. So I started working with the community, and I said, what if we launch a NFT that could raise money to invest into these specific use cases, and teach kids blockchain, and teach kids how to use Web3 in a safe way. It was a very weird time, because even the word crypto was prohibited in school. In Florida, you had to use the word virtual currency for whatever reason. So it was like it was a very it was like kind of the paradox where, like, all of this stuff was happening in Miami, but there was nothing really dripping down, or these kids were not really, like, they're detached from the actual world. I mean, imagine being able to graduate high school learning how to code. How many jobs opportunities you would have versus going to a 4-year college or something. Um, and this NFT collection was called City Packs. So we worked with a Miami foundation, not for profit, and we said, okay, we're going to make these packs, and all of the funds, or 85% of the funds, are going to this foundation, who's going to help us build this virtual currency curriculum. But then COVID hit, so all of these kids went to school, went home. We're talking about, I think Miami is the second, maybe third largest school district, 500,000 kids, and all of them went home. And what happened was, a lot of these kids didn't have internet connection. 60% of these public school kids depended on the school lunch as their full meal of the day. So there was all these bigger problems that kind of came to light. Um, and we said, okay, virtual currency is not a priority now. Let's just donate as much money as we can to help this out. There's a lot of private help as well in that sense. But that was kind of the beginning of it, NFTs on Stacks. And then I met the whole Stacks, ecosystem of builders, hosted the first Miami Art Basel NFT gallery back, I think it was December 2020 or 21. And that's where I met the Stacks builder and said, there's something here. There's a bunch of gigabrains. They're trying to make Bitcoin more productive. They're trying to build something cool on Bitcoin. They're trying to actually democratize DeFi and make it easy for people to use Bitcoin. And that's kind of how I started, the Stacks ecosystem.
And then for people that are unfamiliar with Stacks, talk to them a little bit about Stacks, and then we can get into the project.
Yeah, so Stacks is a layer 2 in this case, that's building on top of Bitcoin. It uses the Bitcoin storage, uses the Bitcoin finality to allow builders to build smart contracts that can use the Bitcoin state. Okay, so it can use the Bitcoin to transact, and also to record data, record information, and it can read the state of Bitcoin, right? So think about Polygon and Ethereum. You kind of have Stacks on top of Bitcoin, right? So the idea behind Stacks is to activate the Bitcoin economy with this L2 that allows builders to leverage Bitcoin as a secure base layer, right? While doing all the cool stuff that a layer can do. So faster transaction times, Bitcoin finality, leveraging the Bitcoin security, meaning like if you were to fork stacks, you would have to also to fork Bitcoin, and also tapping into this, $1 trillion economy. And in the last 3 years, there's a lot of there wasn't much, talk around L2s. Bitcoin used to be like this rock where you just buy and hold, but in the past year and a half, especially after Taproots and Ornos, Bitcoin got a lot of attention. But Stacks today is the leading L2. We're about a few weeks away from Nakamoto upgrade, which is a big unlock. It's going to allow the transactions to happen in a faster time. Right now, all the Stacks transaction happens in the same time as Bitcoin, so about 10-minute block times. So the Nakamoto upgrade, that's going to get faster. It's also going to move to a full Bitcoin finality, meaning all of the security of Bitcoin is also going to be used in the Stacks ecosystem. And over the last few years, a lot of companies have built really cool products, from liquid staking to NFTs to lending and borrowing to stable coins to wallets. And a lot of the builders on Stacks were first movers on the Orno space. You have Xverse Wallet, you have Gamma, you have Liquidium, Orno's Bot, all of these companies that started as Stacks because they were ready. A lot of these builders were already building with the Bitcoin finality. And how do we unlock more Bitcoin? How do we put Bitcoin to use, right? How do we make Bitcoin programmable? And that's something that's coming as well with the SBTC, which is a one-to-one Bitcoin-backed asset that's going to allow us to unlock this Bitcoin capital. It's sort of a decentralized way to move Bitcoin from L1 to L2 and back, right? So yeah, that's a little bit about Stacks.
Yeah, now that we have a good understanding of Stacks, talk to us a little bit about like BitFlow. What are you guys trying to accomplish there? And also, you mentioned Robin, so shout out to Liquidium and the friends there.
Yeah. So we actually met Robin and the Liquidium team in the first cohort of the Bitcoin Startup Labs. This was a pre-accelerator that was sort of a first step for a lot of builders to like figure out what to build, right? And we were part of this cohort. Liquidium was also part of this cohort. I actually came in with a separate idea because I was in a nonprofit area. I was trying to find ways to leverage tax harvesting using crypto, a donation platform, make it easy for people to donate Bitcoin, which was one of the hassles that I had when working with nonprofits. They couldn't receive, they couldn't manage Bitcoin. My co-founder, Dylan, he came with another idea. And then throughout the program, we actually met up. We started working together, and we found that the market was still very early, and some of the infrastructure was still not there to deliver all of the other crazy ideas. And we noticed that the liquidity was still very, very fragmented, especially on Bitcoin layers. And within like maybe a couple months that we started the program, FTX, Luna crash, all of that stuff started happening. And people lost a lot of trust in crypto. You saw all of these other DeFi protocols, governance tokens going to zero. And we said there's got to be a way for us to do things differently, right? And what we noticed is people were, yes, they were attracted to 3-4 digits APY, but they knew that was not sustainable, and it was clear, right? On top of that, a lot of the fancy products, debit cards, apps, all of that stuff was centralized. And people, I don't think they understood the risk of centralization until all of this stuff happened. FTX and Luna crash and all of the good stuff. And it was sort of a wake up call. So at the bottom of that market is when we started building BitFlow. And I think that helped us define our mission, which first was how do we generate Bitcoin yield, right? People are holding on to Bitcoin. They want to put their Bitcoin to work, but they don't want to risk wrapping Bitcoin over to WBTC or giving up 100% custody of their Bitcoin to a centralized exchange in order for some low APY. And that was the beginning of it all. We said, okay, people want to earn Bitcoin yield. They want to put their Bitcoin to work. What's missing here, and how can we deliver on this promise, right? And that was the beginning of BitFlow. We again started building on stacks first as a stable swap. So one thing that we noticed, bear or bull market, stablecoin is a way for people to on and off ramp. It's a way for them to park their crypto. It's a way for them to, uh, you know, uh, uh, sell and lock in their gains. And because we were so early, this was sort of like the beginning of these DeFi rails. Like, what do we need to build on? And then as we started building, a lot of other L2s and Bitcoin meta protocols started coming into place, right? You have Ornos and you have Tap building on Bitcoin, Bison, Babylon, and so forth. So the Bitcoin liquidity started to become even more fragmented. And we said, okay, there's got to be a way for us to connect this Bitcoin liquidity to allow people to trade different flavors of Bitcoin and trade different Bitcoin assets, right? And that's how we got to the DEX aggregator and where BitFlow it is today. So we're still on this mission to connect this fragmented liquidity, but also to create opportunities for users to earn real yield. And when we say real yield, think of trading fees, and that's generated from the protocol as opposed to artificial APYs, right? Um, and I think that's key, and we're very close to delivering real Bitcoin yield within a couple of months as SBTC is out. But that's something that has led us to this to build BitFlow to get to where we are today. We connect over almost 200 million in TVL from across multiple dexes and platforms. We are expanding to L1 assets as well, which I can go into more details.
Absolutely. So let's talk a little bit about like what users can do there. So presumably you mentioned what stable swaps initially. So talk to them a little bit about what stable swaps are, and then let's talk about like the different assets you can use there, because runes, BRC20s, all those kinds of things.
Yeah. So when people think of stable swaps, first thing comes to mind is USDT, USDC. But stable swaps are any similar price assets. So any versions of Apple to Apple, Bitcoin to Bitcoin, WBTC to TBTC. So anything that shares the same price, that's a stable, right? So for example, we have one of our deepest pool is the liquid staking token, which is kind of like Lido, but STSTX, which is you come in, you lock up your stacks, you earn some yield, and then you get the liquid staking token, and that is paired to stacks. So those two tokens are the same price. So that's an example of a price similar asset or stable swap that's not just based on the US dollar. But since then, we have expanded our pools. But really, at the moment, we're concentrating on connecting this liquidity and allowing users to trade any of these tokens. So with our DEX aggregator, we're actually connecting to DEXs like Alex, Velar, as well as Arcadico, and expanding on it. So that allows people to trade over 100 different types of tokens across 100 and almost 150 pools. And that spans over 37,000 routes. So our 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 current goal is to deliver the best possible rate, so people can use BitFlow to find the best possible rate. You have 1inch or Jupiter on Solana as an example of a DEX aggregator, and that's the first part of the puzzle here is allowing and making it easy for liquidity to flow. And allowing people to spend less time on DeFi, which is already hard. There's a lot of barriers, and imagine having to compare multiple rates across multiple dexes. So right now we do have different types of pools. We have what we call XYK pool, which is similar to Uniswap as well, which is stacks to USDC. We have different stables, and we're also expanding into runes and BRC20s as well. But right now, you can basically exchange any tokens that's on any SIP10 tokens that's on stacks. to between any other token. So what the DEX aggregator does, it not only finds the route, but it also creates different routes that didn't exist through multi-hopping. So usually a user will only have an option to trade tokens that have a liquidity pool or liquidity pair, right? A direct pair. So let's say A to B. But if you want to go A to C and C doesn't have a pool with A, you can't really do that swap before BitFlow. So what we do is we'll swap A to B, B to C, C to D, and we allow users to connect the liquidity that before was sort of fragmented or that would require protocols to launch multiple liquidity pools. So by serving as the middleware, so let's say the Stacks token is the common token across these pools, we can hop from, let's say Welsh to Stacks, Stacks to Alex, Alex to USDA and Arcadico, right? So not only are we finding the best rate, but we're also creating routes that did not exist, and we're trying to find the best route to it. So think of maybe Google Maps. You have the option to take the highway. You have the option to take Turnpike. You're going to pay a little bit more, or you have the option to take some side roads, and it's going to get you there and get you more of that token. In this case, in Google Maps analogy, will get you there faster. And that's kind of what we're focusing right now. It's to create that the best possible trading experience, and then expanding that to connect different layer twos and different layer ones assets as well.
So talk to us functionally about how this works. So does each of the dexes that you guys are aggregating have some kind of like API feed that you guys are hooking into, and then based on which has the best rates, you're then routing the transaction to the respective underlying dex?
Yeah, some of these protocols do have APIs in SDK, but we actually build our BitFlow SDK from scratch. We do analyze all of the different pools and the pool depth, the composition ratio, the price, all of that stuff, and then that's taken into consideration. So sometimes a direct route, which seems to be the best option because of the pool composition, because of the debt, it may have a lower rate than hopping through maybe one or two meme coins and then back to a stable and then back to stacks. So the way that we do it, because all of these contracts are public, these are smart contracts on chain, makes it easy for us to aggregate them and find these best routes, and also create these what we call multi hops. And then the SDK also allows other dexes to tap in to the liquidity of other protocols and deliver to their customers and to their users even more options to trade, right? So, for example, Alex has Lisa, which is the stacking token on Alex, and Stacking DAO has ST stacks, right? So those two are sitting in separate pools, but with the BitFlow SDK and the BitFlow aggregator, actually allows users to go from Lee stacks to ST stacks and to USDA and Arcadico, which also they have their own pool, right? So this connected liquidity allows smaller pools to participate into the ecosystem that else would just maybe be sitting there idle. And it generates fees across all the other protocols. So if it goes through Alex or Velar or Arcadico or whoever it is, those transaction fees are being paid to the protocols, the swap fees. So everybody's sort of winning because you're giving users more routes and more opportunities to trade that else may have been forgotten. So we think it's a win-win. And it's something that it's definitely working. And a lot of the protocols are also using the SDK to build products on top. So when we think of the BitFlow SDK, think of liquidity pool as a service or liquidity infrastructure as a service, right? While we focus on delivering the best liquidity infrastructure, DeFi protocols can focus on what they do best, creating liquid staking protocols, lending and borrowing, whatever it is, liquidation protocols, NFTs, and the list goes on, while leveraging this liquidity. So maybe a protocol can use the BitFlow liquidity infrastructure to liquidate assets. Maybe they could use it for lending and borrowing. Maybe they can use it to offer specific swaps so that you don't have to leave your app. Couple weeks ago, we BitFlow was integrated into Xverse and Ledger Wallet, so the user doesn't even have to leave the wallet to do swaps. So all the swaps on Ledger, for example, is powered by BitFlow, as opposed to Ledger connecting multiple dexes. They could just connect to the BitFlow SDK, and we show them the best rate automatically, and that guarantees that the user is getting the best possible, finding the best possible route, and getting the most token out of their exchange. So that's an example of like a vertical integration across the ecosystem, but also allows builders to leverage this and build really cool products on top, and driving more volume, driving more transactions across the whole ecosystem. So it's a kind of like everybody wins type of scenario.
Yeah, it was. We interviewed the team at Trust Machines. This must have been like 2 months ago. Greg, we're very bullish on Leather Wallet and those guys. So talk to us a little bit, because you mentioned earlier you guys were expanding to L1 assets. Talk to us how you guys are doing that and what you're guys hoping to expand to.
Yeah, sure. So like I said, we did start building on stacks, but there are many other meta protocols and layer twos that are building and attracting liquidity and users. And in order for the Bitcoin ecosystem to survive, uh, this needs to be connected as well. I think it's super important that we're seeing these experimentations, and we're seeing these meta protocols, and we're seeing the attention and the liquidity flowing into these layers, because we all know that Bitcoin by itself wouldn't be sustainable without transactions, without these fees. So our next step is we're already in beta of what we call native Bitcoin swaps. So you can go from native Bitcoin to stacks, native Bitcoin to SIP10 tokens using the same Xverse or Ledger wallet. So that user experience is very seamless. And we're trying to abstract as much of the complexity that exists within the Bitcoin layers by offering users a real AMM that runs on the stacks chain, but with a single Bitcoin transaction, you can actually swap these different assets. One way that we're doing that, we're working with the Pontes Bridge, which is the Signa team. They have a multi-sig wallet, and we're bridging over these assets such as runes or BRC20. A synthetic version of these is minted directly into the decentralized pool. We never touch those assets, and then those pools are used to do their AMM mechanism, right? To do the swapping and the pricing and the liquidity pool. But from a user perspective, they're coming in with native Bitcoin or native Bitcoin assets such as runes or dogs or pups or whatever it is, and they're swapping by just sending a Bitcoin transaction through the bridge, and then the swap happens on the stacks later, happens all under the hood without the user even knowing, and then it sends back the other L1 asset to the wallet, right? So this allows us to use to actually offer users a real AMM, which today is technically not possible on Bitcoin, and gives users more options, because today you have marketplaces. Maybe if you're buying or selling runes or BRC20s, you got a marketplace experience, right? It's a partially signed Bitcoin transaction. You put it up there. It's kind of like eBay. Someone may take it, bid on it, so forth. You have other exchanges that may be centralized. So they're taking custody of your assets, and then they're putting that into a pool or allowing you to swap. And then the third option is centralized exchanges, where you basically giving 100% custody, giving up 100% custody of your token assets, and you're bridging over, you're transferring your assets to a centralized exchanges because of liquidity. And users are not only attracted to liquidity, but are also attracted to the user experience. Being able to like press a couple buttons and swap, buy and sell, that's attractive, right? And at the end of the day, at the end of the day, not the best. It's not always the case where the best technology wins. It's usually the best user experience that wins. So what we're trying to do is abstract all of this complexity that exists within Bitcoin and some of the barriers by using stacks as a layer two to do all of the smart contracts calculations, the AMM, And the user, from the user experience, they're coming in with native Bitcoin assets, they're swapping between runes to runes, runes to BRC20s, runes to SIP10s, runes to Bitcoin and back, which is something that's also not available today. So by leveraging our multi-hops or DEX aggregator, we actually allow users to go from any token to any token by combining these liquidity pools. And that's something that we're super excited because we think that's one of the best use cases for Stacks, especially post Nakamoto, which we're a few weeks away, with promises of 5-second transactions. So from a user, you're going to be, you have slippage, you have all of this stuff that you may get sniped on layer one, etc. But with our AMM, actually within seconds, you're going to get a confirmation that the swap went through. So low slippage, fast confirmation times, low fees. And then it's just the time that it takes to send that asset back to L1, right? And that's something that we can't change. Everyone's used to it. That 10-minute block time, it's going to happen sometime. But locking in that rate and locking in a swap, I think that's something that's very attractive and doesn't exist today.
Yeah, it's a quite interesting amount of developments you guys have going on. And then what do you guys see the platform in 6 months to a year? Is there like a specific milestone you guys are really trying to hit?
For sure. I think right now, as continue to building the DEX aggregator, there's a lot of optimizations and improvements that will be possible post Nakamoto. Connecting more layer twos and layer twos assets, okay, and allowing and working directly with builders. I think it's something that has worked for us very, very well, and we want to continue to do it. Not only like wallets such as Xverse and Ledger, but also liquid staking protocols, Bitcoin stablecoins such as USDA, Arcadico, and Hermetica, working with Zest protocol, Stacking DAO, and others that's to come, like helping them build this infrastructure. I think that's very important, and it's something that we have been doing pretty well. And then expanding into not only the Bitcoin native swaps, possibly Bitcoin futures, and allowing people to use their LP tokens as collateral for other types of DeFi activities such as loans or lending and borrowing. And I think that's going to unlock even more use cases for Bitcoin, which is something that we're very excited about.
Absolutely. Well, I'm excited about that as well. And tell people where they can find you guys online, where they can learn more.
Yeah, sure. So BitFlow.finance is our website. You can also find us on Twitter, BitFlow_finance. But on our website, BitFlow.finance, you find all of the links, the Medium articles, the Discord community. We have a very active community on Telegram as well, and all of the links will be on BitFlow Finance. We're getting ready for our token launch as well, coming very soon. That's going to allow us to decentralize much of the protocol, decentralize the decision, and build governance around it. I think that's very important. From day one, we have taken the approach to decentralize these pools. We cannot move these funds. We have no admin keys. This is user peer-to-peer. But the decisions of the protocols, which pools to launch, the emissions, how much to charge, a lot of these decisions, we want the community to participate. And that's something that we're definitely looking forward to 2025 and forward.
Absolutely. Well, everyone go get involved with BitFlow. Go follow Diego online, of course, and let's continue building the future of Web3.